Hello and welcome to My Finance Teacher. I hope everybody is having a nice day, and today we are looking at gold price. A couple of weeks ago, on the 12th of January, I was expecting gold to gradually start moving into the declining phase of the current intermediate cycle. Fast forward a couple of weeks to today, and what do we see on the chart? Well, the price is actually $10 to $20 higher compared to where it was. So obviously we have not entered the declining phase yet. However, my forecast a couple of weeks ago was for the next couple of months. So over the next several weeks we still have a chance of entering some sort of a declining phase. I don't think on the gold price we're going to see 1,400 before we see some sort of a sizable correction below 1,300 and possibly even towards 1,250. The recent uptick in gold price over the last several days was partly due to the expectation of no Fed rate hike today on the 30th of January. It's not often that I see 100% on this chart, so it's interesting to look at it. But now that the market is pricing in no Fed rate hike all the way up to 100%, what is going to happen to gold over the next several weeks might depend a lot on the US dollar. At the moment, to be honest, I'm not really sure if US dollar is going to continue within the declining phase of the same intermediate cycle, or whether the intermediate cycle has actually finished in the middle of January and dollar is going to continue upwards in an advancing phase of a new cycle. In either case, there are a few cautionary factors to have a look at on the gold price itself, and we're going to look at those at the moment. First of all, gold price at the current level of 1312 is relatively far above 100-day moving average, which is at about 1242. So currently the price is about $70 higher than its 100-day moving average. So even based on mean reversion, I expect price to correct towards this average, maybe not tomorrow, but again over the next several weeks. After all, even in strong advancing phases, as we've seen at the beginning of 2016, when the price was nearly $200 higher than its 100-day moving average, eventually during the declining phase of the cycle, price does correct towards that average, although the average might also rise gradually. Another factor to consider is the fact that current cycle has been going on for 5.5 months already, and with the usual duration of about half a year, although it might be stretching lately since the previous cycle was so long. However, with the usual duration of half a year or so, the cycle might soon enter a declining phase. Next, looking at RSI, it has entered slightly into the overbought territory in early January, and although currently it's not into the overbought territory, it's already tangent to that area. And over the next couple of weeks, if gold price continues to rise, RSI might actually be deep into overbought territory, meaning that it will be time for some sort of a correction. And while we are looking at RSI, the next factor to consider is this negative divergence between the RSI and the price action itself. Price has shown us a higher high, whereas RSI does not confirm that at the moment. This is a weekly chart of gold, and from this chart we can see that there are cycles which do have their declining phases, and the current cycle again has been going on for over 5 months. It might be time soon to enter a declining phase of the current cycle. And looking at RSI again, over the last couple of years, nearly 3 years, it has only been this high only once, in September 2017, just at the time when gold price was topping out and ready to roll over into the declining phase of the cycle. And another interesting thing to look at is this shape over here on this chart, which looks like a cup, And the main question at the moment is, have we already seen the handle being formed all during January, or are we going to see a more discernible handle as we enter the declining phase of this intermediate cycle? To be honest, I find it a little bit difficult to answer this question definitively, but I would say there is more than 50% chance, there is probably around 60% chance, or even slightly more than that we are going to see a sizable correction giving us a more discernible handle. But please don't take this forecast too negatively. I do agree with some of you who comment on the channel projecting much higher prices into 2020. After all, even looking at the cup and handle formation, once the breakout is confirmed, a target move, which is the depth of this cup, would give us prices above 1400. And again, to answer your comments, which I'm always interested to read, I do see this some sort of a sloppy rising triangle on a relatively longer term chart. Once the breakout is confirmed, the height of the base of this triangle is about $300. So $300 above 1350, let's say, is 1650. Are we going to see prices above 1600, above 1500 in 2020? I think it's very possible. So in the long term, I am very bullish on gold. It's just that in the short term, over the next several weeks, maybe a couple of months, I'm afraid we might see some sort of a correction in gold price. And to be honest with you guys, on the personal note, I would welcome this correction because I've already sold all of my GDX positions, unfortunately with a negligibly small profits because I entered those positions too early. I did not expect the previous declining phase to last as long as it did. And I only hold about 5% of my portfolio in SLV. So I would welcome a correction, a chance to get more gold in my portfolio before the breakout of this cup and handle formation as well as the ascending triangle. That is my view, and now let me know what do you guys think. After all, January will finish in a couple of days, and what do you guys think? Are we going to see prices below 1300 sometime in February? Leave your comment below, hit the like button, and of course subscribe to the channel if you haven't, and have a nice day.